Hi, good evening, everyone. Welcome to the third edition of FinTech Drinks this year. Bienvenue à tout le monde. Vraiment contente de vous avoir encore avec nous ce soir pour cette troisième édition des FinTech Drinks. My name is Nina May, and I will be your host for this evening. But just before we begin, I really want to take a moment to acknowledge the Indigenous peoples of all the lands that we are on today. So while we meet today on a virtual platform, I'd like to take a moment to acknowledge the importance of the land which we each call home. We do this to reaffirm our commitment and responsibility in improving relationships between nations and to improving our own understanding of local Indigenous peoples and their culture. So from coast to coast, we acknowledge the ancestral and unceded territory of all the Inuit, Métis, and First Nations people that have been the traditional caretakers of this land for many thousands of years. Now, for our event tonight, we have an incredible panel lined up for you. On a des conférenciers vraiment extraordinaires ce soir. Moi, j'ai super hâte d'entendre ce qu'ils ont à nous dire. I hope you guys had the chance to meet some interesting people in the networking prior to this event starting. But as it is the ritual with FinTech Drinks, I want to know, what is everybody drinking tonight? I personally chose this vodka spritzer that actually now looks like grape juice, but don't be fooled. I'm going to be sipping with the rest of you in the background while I'm going to listen to this panel. So cheers, everyone. Santé. Quel bon choix pour ce soir. Écoutez, on veut savoir, vous buvez aussi, please share in the chat, what are your cocktails, mocktails, coffee, whiskey, wine. We're always looking for new beverages, and it's a great way to connect with everyone. Donc, voilà. Ce soir, on parle de santé financière et d'inclusivité. As you guys know, tonight is all about financial health and financial inclusion. I'm very looking forward to learn more about how our panelists are actually contributing to improving the financial health of Canadians. So now I think it's time that we kick off the event for tonight. All right, so our agenda for tonight. First, I'll do a quick introduction of FinTech Cadence. You'll get to meet the 8 startups that are part of the IFH Lab cohort, and then we'll jump into tonight's discussion. So by the way, make sure you write your questions in the chat. Écrivez vos questions dans le chat for the Q&A session at the end of the discussion. Now, once again, friendly reminder to stay after the panel to continue networking with the other attendees. All right, so if you don't know who we are, FinTech Cadence, we're a nonprofit organization started in 2017, and we're Canada's FinTech hub. Our mission is to develop Canada's future FinTech leaders, and we're able to do this by focusing on 3 pillars. So the first one is education. So we do a lot of work introducing talent to the world of FinTech. The second one is focused on supporting early stage FinTech startups. And the third one is the collaboration work that we do with the different stakeholders in the FinTech ecosystem. We have 4 programs. So the certificate is an introductory course on FinTech for professionals and university students alike. Ascension is our 3-month incubation program designed specifically for early stage FinTech startups. The Formathon, which wrapped up last month, is a 3-week open innovation competition where participants are working on solving real industry challenges. And the IFH Lab, which is a 6-month incubation program for FinTech startups that are focused on bettering the financial lives of Canadians. We also host 3 types of events throughout the year. So our FinTech Drinks, which you are attending with us tonight, and they serve as networking events for the industry while we discuss relevant hot topics. We also have our university series. So these are the introductions that we do on FinTech. We run those all year round with universities across the country. And finally, the career fair, where job seekers and employers in FinTech get the chance to connect. Now, I'm very excited to introduce to you the 8 startups of the IFH Lab program. So as I mentioned before, the IFH Lab is a 6-month incubation program for FinTech startups that address issues around financial health and financial inclusion. We are very proud of the startups that made it into the program. So without further ado, please meet the teams.
I'm Reem Sharkani, co-founder and CEO of Wallo. Wallo is a neobank for families that empowers parents to teach their kids about money. What makes Wallo unique is that we embed financial education into a fun gaming experience using real-life money.
Hi, I'm Mohammed Asatullah, CEO of Benji. At Benji, we believe Canadian entrepreneurs deserve a better business bank. So we've partnered with one of the top 6 banks to launch Canada's first neobank for small businesses.
Hi, I'm Christine, the co-founder and CEO at Untangle Money. Untangle Money helps women better understand their now money and their future money and how the two are related. Untangle Money is a welcome space for women to interact with and learn about their finances. Our automated plans are judgment-free, jargon-free, and we don't sell any other products.
Hi there, my name is Matthew Sang. I'm the founder and CEO of Seedwell, an AI financial planner as an employee benefit. We're on a mission to completely transform the financial management industry by automating personal finance at the payroll level.
Hi there, this is Nadia, founder and CEO of Kinza. Kinza is an evidence-based management solution for the contemporary rotating savings user. At Kinza, we believe in the power of community-based savings. Through streamlining the administrative burden of managing or organizing a savings group, we aim to make it as easy as possible for people to harness the power of their own social circles to meet their saving goals and lending needs.
Hi everyone, my name is Olga and I am the founder of Bounce. We are the insurtech platform for the future of work. The first thing we do with self-employed workers is we help them to understand their unique risk profiles. This tells them what type of insurance products they really should be investing in. And then we match them to the most cost-effective insurance options on the market.
Labora is the leading platform for farm owners and temporary foreign workers. Through Labora, farm owners can reduce the administrative work and support their seasonal workers with automated payroll transfers. We provide a simple, secure, and efficient solution for unbanked temporary workers who are used to sending and collecting cash and paying high fees.
Hi, my name is Jonesh Ninga, and I'm the CEO and co-founder of MICC Financial. MICC is a digital wallet that allows users to save, spend, and share payments while building credits. Through our platform, users can invite friends, schedule automatic payments, and we report all the payment activity to the credit bureaus.
Wow, that was really amazing. By the way, guys, the founders of the startups that you just saw are with us tonight. So make sure you connect and interact with them. Now, the FinTech drinks are possible thanks to our amazing sponsors and partners. So first, I'd like to thank EY, our partner, our platinum sponsor. And we also have Expertis and Station FinTechs, which are our gold sponsors for these events. I also want to give a shout out to our community partners, Yes Montreal, District 3, and Next Canada. Now, I think everyone is ready for the main event tonight. My colleague Elvis, our Director of Financial Health, will be the one moderating the conversation tonight. So Elvis, I'll let you take it away.
Thank you, Nina. As you can see, as the Director of Financial Health, this is a topic that's near and dear to my heart. And I'm so excited to have 3 great panelists today, Ruth Stephen, Alex Mazur, and Keith Taylor, representing the government, FinTech, and financial institutions respectively, and all providing their perspective on how do we create more inclusive financial services here in Canada. For this FinTech Drinks, we're actually switching up the format a little. So instead of a panel, we're going to have, we've asked each speaker to prepare an 8 to 10 minute presentation, and they're going to actually present their perspective. And then at the end of each of the speakers, we're going to bring them all back for a Q&A session and really deep dive into their topics. So our first speaker for today is Ruth Stephen. Ruth is the Director of Strategic Policy, Research, and Experimentation at the Financial Consumer Agency of Canada. She leads her team in anticipating and responding to emerging issues in the consumer protection and financial literacy fields. So in the past month, the FCAC has actually announced the renewed 2021 to 2026 National Financial Literacy Strategy. So we're really excited to hear from Ruth today about some of the research that she has done and some of the more new priorities for the FCAC. So without any further ado, please welcome Ruth Stephen.
Thank you, Elvis, and thank you, FinTech Cadence, for the invitation. Hi, everyone. It's great to be with you this evening. I'm joining you from the National Capital Region in Ottawa, which is located on the traditional unceded territory of the Algonquin and Anishinaabe people. For those of you who are unfamiliar with the Financial Consumer Agency of Canada, we are an agency of the Government of Canada, and we have a mandate to protect financial consumers. And we do this by regulating the market conduct of financial entities to ensure that they're abiding by consumer protection legislation and regulation. And we also work to strengthen the financial literacy of Canadians. So this means helping people acquire the skills, the knowledge, and the confidence that they need to adopt positive financial behaviors. So today I want to help set the context for the discussion by presenting some statistics on the financial health of Canadians and a framework for actions to strengthen financial inclusion and financial resilience. Last year, the FCAC launched 2 monthly surveys to monitor how Canadians are managing their day-to-day finances and their use of banking products and services during the pandemic. Some results have been positive. For example, more Canadians describe themselves as financially knowledgeable and are engaging in behaviors that are important for their financial well-being, such as budgeting. In addition, many have accessed government and financial supports or have been able to draw on their savings during this time. And finally, 83% of Canadians are spending less than their income. However, there are some concerning trends. More Canadians feel like their finances control their lives, and over 40% sometimes struggle or fall behind with their bill payments. This is particularly true for those with lower incomes who have a disability, Indigenous people, and new immigrants. Pandemic, over 70% of Canadians have reported increased stress, and this is most prevalent among women, those with part-time or precarious work, and individuals with reduced household income. Survey results also showed an acceleration in banking trends that have some important implications for financial inclusion. Canadians have increased their use of electronic banking products and services, such as contactless payments and e-transfers, as you can see on this slide. And at the same time, they've reduced their use of cash and checks. While evolving forms of payments bring many benefits, they also risk leaving individuals with vulnerability behind, such as those with low digital literacy or access. Our banking survey results also showed that lower income Canadians were the most likely to pay fees, such as overdraft fees, and they were also the most affected by bank branch closures, in addition to Indigenous individuals and visible minorities. So overall, the pandemic has exposed and underscored many financial vulnerabilities that households were already facing, and it's accelerated other vulnerabilities. So what actions can we all take to build a more accessible and inclusive financial ecosystem in Canada? Well, last week, the FCAC released Canada's National Financial Literacy Strategy, aimed at strengthening financial resilience and inclusion in an increasingly digital world. For many people, money management is confusing, frustrating, and overwhelming, not to mention that the financial marketplace has grown in complexity with new and varied products, services, and advice, being offered by different providers through new channels. And so they're making their financial decisions in a much more complex context. And the context in which people make financial decisions impacts their ability to make a decision. So instead of putting the onus solely on the individual, the National Financial Literacy Strategy outlines actions that all financial literacy stakeholders can take to bring about contextual, structural changes that will help people make appropriate decisions and build their financial health. And these actions are grouped into two categories: barriers and catalysts. Reducing barriers is extremely important because barriers in the financial system can limit or hinder individuals from accessing, understanding, or using financial products, services, or education that are beneficial for their needs. The way that information is presented can be a barrier to understanding and an obstacle to making appropriate decisions. So, the first way to reduce barriers is to communicate in ways people understand. We can help overcome language, accessibility, and literacy barriers by providing information in plain language that's not misleading, by simplifying information by using visuals, infographics, videos, or other formats, and then also conducting user testing to ensure that the audiences that we're trying to reach comprehend the information that we're giving to them. Excuse me. Second, we need to build for diverse needs. We have a wealth of diversity in Canada, and diverse populations have unique needs, priorities, and views towards their finances. So we can all remove barriers to financial inclusion by understanding these factors and tailoring financial products, services, and educations to meet the needs of diverse population groups. We can also conduct consumer surveys to collect feedback on the quality of service offered to diverse populations, and then use this data for continuous improvements. Third, the pandemic has accelerated the move to digital financial services. While this shift carries many benefits, it also increases the risk that some segments of the population will be left behind or underserved, particularly those with limited digital access or literacy. And there are many ways to mitigate this, but one straightforward step is to include digital literacy and fraud prevention education alongside financial literacy information. We also need to catalyze action to build financial health, because even in the absence of barriers, consumers might not always be able to make the right financial decisions at the right time. And this could be because of the complexity of the financial marketplace, the numerous choices that they face, or other factors that are competing for their attention. Catalyzing action means creating more opportunities for people to take positive financial actions. And this includes three priority action areas. First, we need to enhance access to trustworthy, unbiased, and affordable financial advice and spread awareness of its availability so that individuals with financial vulnerabilities don't feel the need to turn to temporary stopgap measures such as high cost lenders, which could result in more negative financial outcomes for them in the longer term. And second, we can use behavioral design to simplify financial decisions for consumers and help guide them towards their financial goals. For example, by providing just-in-time education or comparison tools at the point where they're seeking to make decisions. For example, if an individual is looking to get a mortgage, providing them with different options, different service providers, and information on the impacts of different amortization periods, the difference between variable and fixed interest rates at the time where they're seeking to make decisions. And this will help them make more appropriate decisions for their personal circumstance. Fintechs can also incorporate ethical defaults or nudges to help people make positive choices more easily. So, for example, providing individuals the opportunity to round up their expenditures and then save the difference. Lastly, we need to adapt and strengthen consumer protection measures to respond to an increasingly digital financial marketplace. For example, ensuring the protection of consumer data and preventing fraud and financial abuse. In addition to these ecosystem changes, there are several key areas of engagement that have been proven to help individuals strengthen their financial health. These are helping people build skills to navigate the financial marketplace, strengthen their financial knowledge and confidence, manage their day to day expenses, manage debt, and build savings. So I'd like to leave you with a few key messages. First, the impacts of the pandemic have been divergent on households. Some have been able to reduce expenses and save, while other households have experienced significant financial challenges. The pandemic has had a disproportionate impact on women, Indigenous individuals, newcomers, and low income workers. As a result, we need to focus on targeted ways to address the challenges faced by individuals with vulnerabilities. And this is an area where we could all collectively have a significant impact. Second, we need to design financial products, services, and educational efforts to be inclusive of Canada's diverse population. And this means building knowledge of the populations that we serve and focusing on ways to effectively reach them. Third, the need for strengthening not only financial literacy, but also digital literacy is more important than ever before so that nobody is left behind. I know that so many of you are passionate about this space and we all want to make a difference. And we can do this by innovating, collaborating, scaling up, and building financial literacy, inclusion, and resilience together. My team at the FCAC has launched several pilot interventions and is developing several others, and I'd welcome discussing them further and also hearing from you on your initiatives and potential areas of collaboration. And finally, I would just mention that the national strategy and the COVID statistics dashboard can be viewed on the FCAC's website. The link is on your screen, along with my email address. I'd love to hear from you. Thank you. Elvis, over
Great, thank you, Ruth. It's so exciting to hear that the FCAC is engaging with fintechs, really focused on the financial health of Canadians and doing it from a holistic lens. And so I'm super excited about all the work that you're doing. And it leads very nicely to actually our next speaker, who's going to talk about some of these solutions that you say we need here in Canada. So next up, we do have Alex Mazur. Alex is the co-founder and co-CEO of Commonwealth. Commonwealth is a mission-driven fintech providing digital portable retirement plans. And before Commonwealth, Alex actually also served as the director of policy to the Ontario Minister of Finance during the global financial crisis and has a lot of experience in Ontario's retirement system, specifically from there. So without further ado, please welcome Alex to the stage.
Well, thanks very much, Elvis. It's a pleasure to be here. I especially like being invited to an event that has drinks in the title and being invited to talk about retirement, because usually when I get invited for drinks, retirement is not a topic that comes up a lot. So I appreciate the opportunity to talk a little bit about the work that we're doing at Commonwealth. I also love the framing of this event, and I loved the presentation that you gave, Ruth, to talk about, a view that we share, which is that some of these issues of financial insecurity have become even more important in light of COVID-19 and some of the greater disparities that we're seeing as a result of the pandemic. So what I'm going to try to share with you today is some insight on the specific issue of retirement, and to talk a little bit about how we're trying to use digital technology to tackle that issue for Canadians that have been left out of our traditional retirement system. So as Elvis mentioned, we are Commonwealth. We are a fintech company that has a mission to make it possible for everybody to have a financially secure retirement. We are very passionate about helping people with this issue, and we really have an issue around democratizing access to high quality retirement plans. So I want to talk a little bit about the problem of retirement, because some of you may not have thought a lot about it, and give you a little bit of our perspective on it. So in some ways, it's a fairly simple problem if you think about what it is that a retirement plan is trying to do. So you earn money throughout your working career. And what a retirement plan is supposed to do really is to allow you to save up enough money to maintain your standard of living post-retirement. This has become a more challenging issue as people are living longer, but really the goal of retirement finance is a pretty simple one. However, achieving that goal is a complicated thing. One Nobel laureate called retirement the nastiest, hardest problem in finance. And that's really because you have to combine a number of different fairly complicated concepts. I won't go through all of them, but you have to think about investing. You've got to think about how long you're going to live, which most people have a very poor understanding of. You have to understand the public benefits ecosystem. You have to understand tax. And then you have to do these things over a very long period of time, because retirement finance is really a life cycle problem that you start when you're young and you don't stop doing it until you're a very old age in most cases. So for the average consumer trying to navigate this on their own, it's very, very challenging. Most people describe retirement systems in terms of 3 pillars. This is kind of the international standard for thinking about retirement systems, and it's important context for kind of where a company like ours fits in. The first pillar is a very important one that's been enhanced in recent years. So if you think about the Canada Pension Plan or Old Age Security or the Guaranteed Income Supplement as critical programs that for some Canadians, for many Canadians, these account for 50% or more of their retirement income. And then the rest has to be made up of a combination of retirement plans through your workplace, which is traditionally called Pillar 2, and then private savings that you save on your own. And part of what's happened over the last 2 or 3 decades is that Pillar 2, the workplace pillar, has really shifted a lot. It used to be that many people had a defined benefit pension plan. Now only about 9% of people in the private sector have a defined benefit pension plan. More of that risk has been shifted to the individual. And basically people have been left more and more on their own to figure out how to save for and draw income in retirement. And that's where there's really become a need for more solutions in this space as the economy has shifted and employers have become less and less willing to offer defined benefit pension plans like they did, in the 60s and 70s. Some stats that really illustrate the magnitude of this problem. So there was a recent survey that came out that showed that 75% of Canadians are concerned about not having enough money in retirement. This typically shows up as one of the top financial concerns of Canadians, which makes sense because it's one of people's retirement plan, perhaps after their house, is often their most important asset. 10 million people in Canada lack access to a retirement plan through their work. That's a huge number of Canadians. Almost a third of Canadians do not have a retirement plan at work. And this was a shocking stat that came out a few years ago, that the median retirement savings of Canadian households within 10 years of age 65 who did not have workplace pensions was only $3,000. So if you think about that, that's the total retirement savings, median retirement savings. It's nowhere near enough to maintain your standard of living for most people. And what it really shows is that many people are struggling to save anything if they don't have some kind of retirement plan through their work. So this is a huge social and economic problem, and no single company is going to solve it on their own, but we're trying to make a contribution through the work that we're doing. If you look at who is not served by Canada's retirement system, it looks a lot like the list that Ruth gave of the people that are most vulnerable to financial insecurity. If you work for a small employer, you're unlikely to have a workplace retirement plan. If you earn a lower wage, you're less likely to have a plan. If you're part of the gig economy or a contingent worker or you're self-employed, you're also probably not going to have a plan at work. And there's been some really interesting and troubling data that's come out recently about Indigenous Canadians and racialized Canadians showing that they're less likely to be able to maintain their standard of living in retirement or have access to kind of workplace retirement plans. So the need for inclusive supports in this space has been growing and has become even more acute in light of the pandemic. When we look at the private sector and its provision, we see some shortcomings that we're trying to address through our platform. So one is, you probably heard about this many times before, but we do pay some of the highest fees in the world in Canada. And this has a especially big effect on retirement savings. Our fees can be 2 to 3 times higher than what you see in the US. It's a market that's highly dominated by a small number of large insurance companies. There's very little competition in the group retirement space, which is the space that we're in. And then lastly, interestingly, most providers have not focused on the issue of retirement as much as we think they should. There's a lot of people's accounts are treated more as an investment account as opposed to a retirement plan. And I'll explain more about what the difference is when I get into the solution that we've designed. The opportunity here, one thing that gets us very excited is that there's a chance to create a huge amount of financial security and a huge amount of value for people. We did a study a couple of years ago with the Healthcare of Ontario pension plan, which is one of the leading pension plans in the world, that looked at what is the lifetime value of participating in a good workplace retirement plan. And we found that for a typical Canadian, it could be worth almost $1 million saving in a good plan compared to saving on your own. In other words, the cost of saving for retirement could be almost $1 million less if you save through a good workplace plan than if you try to navigate this as an individual working with a bank or another traditional financial institution. So that's a kind of a quick overview of the problem. I want to talk a little bit about how we've tried to approach a solution and look forward to questions as we get into the Q&A as well. So our company was founded in 2015, and before we actually built our platform, we spent almost 5 years of research and development looking into what drives value in the topic of retirement, since it is such a complex topic. And we found that there's really 6 things that drive value, and they're outlined here on this page: smart saving, automatic investing, keeping fees low, finding ways of getting income for life, optimizing your government benefits and keeping your taxes low, and then finally having a plan that's portable for life that you can take from employer to employer. And essentially what we've done with our technology platform is to try to embed these things in a simple to use user interface that's automated, that has a lot of those evidence-based nudges that Ruth talked about in the introduction, and that is wisely accessible to people, particularly through their workplace, but something that they can take with them after they leave that workplace. A couple of examples of what the platform does. Number one is it actually will give people a recommendation of how much they should be saving that's personalized to them to help them meet their retirement income goal. It will also build in something we call auto escalation, which allows people to gradually and automatically increase their savings over time to help them stay on track for their goal or to catch up for their goal if they can't afford to save the amount that they need to save today. We've also built the plan around a monthly income. So that also factors in government benefits, which we'll talk more about as well. And we've come up with a way of investing for retirement, working in partnership with BlackRock through something called target date funds, where people can really click once and have an automatic investing plan that automatically becomes more conservative as they get older, and that's appropriate for their retirement date. Really takes a lot of the guesswork out of investing for retirement and allows your asset allocation to be done by a globally leading expert firm like BlackRock. We've also paid careful attention to the needs of modest earners, so those earning less than $50,000 a year, in a couple of ways that I'll give examples of. One is by incorporating the tax-free savings account into retirement savings, so that people that are earning less than $50,000 a year are suggested to save for retirement in the TFSA, which was originally designed to help people who are at a lower income level preserve their government benefits in retirement. It's much more efficient than an RSP or a pension plan for certain income groups. Secondly, is we've helped people better understand those government benefits that I talked about earlier, especially the guaranteed income supplement, through smart technology and building in estimates of those things and just-in-time education. In terms of how we bring our product to market, we work primarily through partnerships. Most of these are built around the workplace because that's proven to be a very effective way of reaching people and getting them enrolled in retirement plans. So we work with many small and medium businesses, not-for-profits, advisors and brokerages, credit unions, labor unions, professional associations, as well as payroll and HR platforms. So in the couple minutes I have left, I'm just going to give a couple of examples of the kinds of partnerships that we've put into place. So the first is that we collaborated with a group of not-for-profit leaders and foundations to create a nationally portable plan for Canada's not-for-profit sector. This is a plan that's serving not-for-profits, many of them smaller not-for-profits in 12 provinces and territories, organizations like women's shelters, environmental NGOs, and boys and girls clubs, to provide a plan for not-for-profits and charities that don't currently provide a plan to their employees. Another example is that we partnered with a union, SEIU Healthcare, which represents many frontline personal care workers, personal support workers, to create a plan for PSWs and other modest income healthcare workers that didn't have a plan through their workplace. And in this case, we worked with the union and the employers that are associated with that union to get as many of their members as possible. They represent about 60,000 frontline healthcare workers, largely in Ontario. A third example of a partnership is we're working with Humi, which is an HR platform, a technology-enabled HR platform that largely serves small and medium businesses to reach them with a retirement benefit that's very easy to set up and administer through easy automatic payroll deductions every month. So that's a great way of reaching the many small and medium businesses that would like to offer a plan, but feel that due to reasons of administrative complexity and cost, they're not in a position to do one to offer one today. So that's a bit of an overview. Look forward to the questions, the comments, and again, thank you very much for having me today.
Great. Thank you, Alex, so much. Your work in helping frontline workers and helping our nonprofit sector is super necessary here in Canada. And as Alex mentioned, please put your questions in the Q&A now, and then after Keith, our last speaker, goes, we'll bring all the speakers back and we can get through the Q&A at the end of the talks. So as mentioned, I do want to introduce our last speaker of the evening. Thanks again, Alex, who's Keith Taylor. Keith is the Executive Director of the Duca Impacts Lab, an innovation hub for Duca Credit Union. In the past, Keith has also worked as a strategic advisor to a group of companies that provide over $500 million of community investment annually. So please welcome Keith to the stage.
Thanks, Elvis. It's a pleasure to be here, and thanks for joining me, everyone, tonight. So I'm going to speak a little bit about our work at the Duca Impact Lab and at Duca Credit Union, particularly around our work designing for financial inclusion in one pilot in particular, our escalator loan pilot, which is done in conjunction with a fintech partner called Cashflow and a credit counseling partner, nonprofit credit counseling partner in Credit Canada. So I'll give you some context. The Duca Credit Union has been around about 65 years. They're actually kind of an interesting proof point for the viability of financial inclusion and community banking. We're actually started by a group of newcomers to Canada that the banks at the time wouldn't deal with, but they still needed to bank, and so they created their own bank. They still need to borrow money. They still needed checking accounts. So they created their own vehicle for doing so. I think in our first year, a very, very, very small balance sheet, but most recently just passed about $5 billion in assets, which is particularly impressive when you consider we don't really have access to public markets to raise equity. All the equity we have in the credit union comes from the members of the credit union and from growth in the business. So an interesting business growth story, but I'm telling it more so to explain kind of what that really tells us. If you think about the fact that that cohort of initial members of Duca had to create the credit union to gain access to basic banking services because they weren't able to access it elsewhere. It means on paper, they weren't able to send the right signals to the banks to be good banking customers. But in actuality, they were actually excellent banking customers. They were the primary genesis or primary driver of that growth over our 65 years. And as we started to unpack our purpose as an organization and our mission and what we want to be going forward, we realized that part of our story was a really important one. And we want to think about, okay, well, if the signals that underbanked individuals were sending to banks that was prohibiting access in 65 years ago were imperfect then they're imperfect now as well. And if they're imperfect now, we want to create some space to come up with some better signals. We want to create some space for some real experimentation and some real innovation from a financial institution on how to create better access opportunities for individuals that are not able to get great access to mainstream financial services now. So the Impact Lab was created in 2019, and the primary mandate of it was to build banking that benefits all, and to answer the question, what would banking look like if all we were really trying to do was solve problems and create opportunities? The Impact Lab is a registered charity. It was founded by Duca Credit Union. Under the charity, there's actually a few different entities. One of them, and they're all kind of bought together for the common purpose of serving as a hub for building and scaling solutions to inequities in today's financial system. So what we do is we bring together community organizations, we bring together fintech companies and other innovators, and we bring together the capital of the credit union and the know-how of the credit union to really design and test and scale catalytic solutions to fair financial services for all. So I'm going to speak a bit about one of those initiatives. But before I do that, I just want to take the opportunity to share some of the information and research that guides our work at Duca. We often talk about financial services, we often talk about financial literacy, as a numbers problem. Like there's a debt element, the product's not designed the right way, but we're increasingly becoming aware of the importance of designing for experience and fitting within a service model that's that is able to build trust, particularly in excluded demographics. So we do a survey every year with our partners at the Angus Reid Group. We really wanted to explore the more behavioral side of what's driving financial decision making, particularly as it pertains to the relationship consumers have with their financial institutions. So what we designed was I think a first of its kind study where we looked at perceptions of fair banking amongst banking organizations, so financial institutions, and those same perceptions amongst consumers. And we want to compare those two data sets to evaluate the gaps, and then organize our pilots around those greatest areas for opportunity. And that information is telling us some really interesting things. For one, trust, and I think a couple of those have been highlighted, particularly in Ruth's presentation, which was great to see. But trust is very low, and when we expand the definition of underbanked from this kind of fringe segment that doesn't have access to bank accounts and is very hard to lend money to something that's more of a real reflection of reality, which is a group, and a fairly large group at that is not very well served by the mainstream banking sector, that is gaining access to banking services elsewhere. So when we look at groups and segments that have low trust, they're all, in our research, they're 5 times likelier to take a payday loan. Particularly in the BIPOC community, trust is significantly lower. And it's influencing where they go for help, what kind of information they consume from a financial literacy perspective, and also shown some early signs that they're paying a lot more for certain types of financial services, particularly personal loans and student loans, which we're going to endeavor to unpack even more as we go forward. But it's also painting an interesting picture of what's happened throughout the pandemic. So institutions have helped a lot of people navigate the financial shocks of the pandemic. What was interesting to us to learn was that even though that is true, half of the people that needed help during the pandemic didn't ask their institutions for it. And there's a lot of reasons for that. One of the most interesting ones is, why didn't I trust my institution to work with me to solve this problem? And the answer may be that in past, if you've met with a financial advisor, chances are, 40% of you that have met with a financial advisor do not want to do so again. You're going to want to keep your interactions to a minimum going forward. So all this are like little pieces of a puzzle. And when we talk about financial inclusion and financial literacy and really having an impact on the financial health, these institutional relationships need to be accounted for, particularly in the design of the solution. So a lot of these insights I'm sharing with you now are underpinning one of our most successful pilots to date, which is the escalator loan pilot. This is the pilot I was speaking about. We have a fintech partner named Cashflow who has produced a really innovative platform for evaluating cash flow and variability in cash flow and the degrees that impacts your spendable money. And we use that as a basis for adjudicating our loans. And we also partner on this pilot with Credit Canada, which is a national nonprofit credit counseling agency, who works with the borrowers in the pilot prior to taking in a sort of loan to identify who would benefit the most, and who would be a good fit, and then work with the payment and application phases of the pilot. So the escalator loan is intended to be a solution for those people in trouble with high cost debt. So it often means that they're in trouble with payday loans. Many of them have multiple payday loans outstanding. They could be in trouble with the easy financials of the world, or these high cost debt consolidation companies that emerge, every 6 months, it seems. They're paying a lot more than they should for that money, and they're spinning their wheels as a result. And it's really having an impact on food security, on housing security, on the experience they're able to provide their children, on the healthcare they're able to access. So we wanted to solve for that, because we knew, based on the previous slide, that they likely weren't going to go to their mainstream financial institution to solve for this problem. And we wanted to create a way out of that situation for these folks. So what we did is created the escalator loan. It's a prime plus 2 loan for those in trouble with high cost debt. There's interest rebates for desirable repayment history. So if you do everything you say you're going to do, you'll get the plus 2 back. So it becomes a prime rate loan, which is far better than they would be able to do on the market today. And what's also innovative about it is it utilizes a cash flow based adjudication model. So we don't look at credit scores. We don't look at the common service ratios. We look only at their cash flow and their capacity to maintain a debt payment over time based on their cash flow. The terms of the loan are geared towards their capacity to repay. So the actual term of the loan can vary from 24 months to 48, depending on the cash flow capacity. And it's produced some really interesting results. From a profile factor standpoint, it's become a really specific demographic. We're seeing a lot of women, about 38 years old, half of whom have dependents, and 3/4 of whom have a post-secondary education or higher, and annual income about 50K. That number has been featured in a couple of the presentations so far tonight, and I'd be interested to chat about that some more. And almost all of them are renting housing. So what we're seeing from an impact perspective is that almost 40% of them are now able to access healthcare services or non-provincially covered healthcare services like prescription drugs, dental, mental health services, anything that would typically be covered either out of pocket or through benefits programs. We also see a material impact on the borrower's ability to pay for basic needs such as food, and particularly in food security. Almost 60% are saying it's had a material impact on their ability to pay for food and utilities. 42% of them are building assets so far in the pilot. Housing security is almost about 50% have said it's increased their housing security, either able to deal with rent arrears or access a more stable housing situation. And most important, maybe not most importantly, but of significant value, is that they're also reducing their debt. Almost 60% of them have decreased their debt by 20% or more since taking the loan. So it's showing some real promise. We're really excited about the way this is going. We openly are interested in scaling this solution. We're getting to a point where we'll be able to do that. So if you'd like to talk to me about that, that would be, I'd love to hear from you. My email's on the next slide. But I think what this also shows is just the potential for financial institutions to experiment with this type of solution more actively than we have. It's a really critical part of the financial health path forward. And there's a great opportunity for credit unions and financial institutions generally to experiment with this. And I think what this pilot shows is that if we want to, we can.
Great. Thank you, Keith, so much for sharing the escalator loan pilot and some of the work that you're doing at the Duca Impact Lab. I want to thank all three speakers again for sharing their insights. I think one of the key things on my side is what I've realized from all three speakers is it's not a financial institution by itself can solve this. It's not a fintech by itself can solve this, but really it's an ecosystem effort. So what I do want to do now is welcome back our three speakers to the stage, and we're going to start our Q&A portion for this evening. So welcome back, Alex, Ruth, and Keith.
Thanks, Elvis.
Great. No, so I really appreciate your three presentations today. I'll get us started. And the first question that I have is, you all today talked about your own personal initiatives and what you're doing at your organizations. My first question is just around what else do you think is necessary here in Canada from a financial health, inclusive financial services standpoint? And where do you think some of these gaps that we should be encouraging more action here in Canada? So does anyone want to go first? Great, Alex, I'm going to call you first.
Okay.
Yeah, I mean, I think when it comes to the problem we're trying to solve, government does have a very important role to play. So there's a number of policy interventions that would be helpful. One example that comes to mind is we helped design a program or a proposal for what's called a Canada Savers Credit, which would give people that are modest income an additional incentive to save using TFSAs, and builds on a pretty successful US program. We have a tax system in Canada that is, some people call it upside down. In other words, it gives more incentive to save for people that are upper income. So that's something that would be very helpful. And the other thing that would be very helpful would be, as has been done in the UK, the US, and a lot of jurisdictions around the world, is to move towards more automatic enrollment in workplace retirement plans, so that everybody, would at least have that as a default, that they'd have the option to opt out. But that's been one of the most successful interventions for getting more workplace retirement plan coverage around the world.
I think from our perspective, particularly in the escalator loan pilot, I've often been surprised at how many of the borrowers have multiple payday loans outstanding at one time, which is technically against the regulations, and suggests that there's something missing in that puzzle. It's either there's some common reporting database that's missing, or an oversight piece there that needs to be tweaked, or something. But enforcement of those regulations would make a big difference for those folks. I think the other thing that would be interesting to explore for financial institutions would be, the tracking and management of diversity data from a borrower perspective or a customer perspective. It's something that has generally not been done. I think out of fears that it would be used as some sort of vehicle for bias, but what we're finding is that there's bias there anyway. And at least this way, there would be some sort of transparency. And if you measure it, you can manage it. And it would be an interesting piece of information for financial institutions to be sharing, I would say.
Great. That's super interesting. And I think both you, Keith, and Alex mentioned kind of the role of government. So we do have Ruth here on the stage, so not to put too much pressure on herself, but would love to hear, Ruth, from your perspective, what are some of the things that we need to do as an ecosystem here in Canada?
No, the recommendations are very, very well taken from Alex and Keith. My team is currently working on a savings interventions where we are encouraging and nudging low-income individuals to save through the tax filing process, because we know that's one of the biggest one-time lump sum payments that they'll receive in a given year. So we're encouraging them to deposit that into a savings account, and using behavioral science to make that nudge in collaboration with our academic and industry partner on that project. And definitely the other areas are crucial. Retirement savings and payday loans is something that's also been on our radar for a while now. Very complex FPT, federal, provincial, territorial space there. But from my perspective, one of the things, there are so many things that that could be said in terms of gaps. And there are also a lot of amazing projects, and there's a lot of amazing work underway, as you heard from Alex and Keith. But I would say what we're seeing right now in terms of the acceleration of innovation in the online financial marketplace is also a cause for ensuring that consumers who may already be experiencing vulnerabilities know what they're getting into in terms of the security, privacy, and liability risks involved with sharing their data online with various service providers. Often consumers might not know, and it's not just incumbent on them to know their rights and responsibilities, but the whole ecosystem needs to take actions and steps to proactively ensure that consumer data is protected and that the checks and balances are in place so that they have opportunities for recourse or redress, and that we're making every effort to protect their data.
Right, and I think Ruth, on that point, it kind of leads nicely to my next question, because all three of your talks centered around who are the underserved here in Canada, who are not financially included. So you mentioned people that are lower income workers, people that are Indigenous, probably individuals in rural areas, right? So it's potentially hard to reach these populations and serve them. And I just want to hear your thoughts from all three of you in terms of what has been those challenges in terms of reaching some of the populations that you're trying to reach, and what have been some of the ways that you've been trying to address that, and to Ruth's point, while keeping security and data and all privacy all to mind, because Keith mentioned that there is less trust sometimes with these populations as well. So would love to hear from you, Alex, first, if you don't mind.
Yeah, it's a really interesting question, Elvis, and it's one that I'd say we've spent a lot of time thinking about, and it's part of the reason we've tried to serve people through partnerships. I mean, it's part of this issue of trust. So if you take, for example, personal care workers, which is one group that we serve, we decided we wanted to partner with the union that represents them and that bargains on behalf of them, has worked with them for a long time, and work in collaboration with the union to do a lot of user research, focus groups, understand their needs. I mean, one of their big challenges is just having enough money to set aside, right? And there's a feeling that, I'm already stretched as I am. How could I have the money to save? But what we found from our research is that there was also a strong desire to save as well. And that some of the preconceptions that people have about modest income people not being interested in saving were incorrect. So, partnering with groups that have the trust of their members is one strategy we've employed. Going through the workplace, going through payroll is a really powerful way too, because payroll-based savings, gets people saving. It's, you reach them in their work. The employer provides a matching contribution that can be very helpful as a way of reaching people. And also providing a human touch. So for example, when people are enrolling in our plans, we give them an option to have a guided enrollment with a person, right? Because some people might say, I haven't used this digital platform before, I'm not sure. They can actually share their screen, and they can get somebody on the phone who's got 20, 30 years experience in the space to walk them through it and talk about it. So most people don't use that option, but for those that do, I think they really value it. And we try to communicate to people that we're not just a digital solution. There's also a team of people, in behind it, supporting it, providing that education.
And Keith, on your side, how were you able to engage with the populations that you were serving? You shared the demographics earlier in terms of the people that you're serving with your escalator loan products. Like, how did you build that trust and do that outreach?
Well, I think in our case, dealing with a trusted channel was really the difference maker. So being able to work with our partners at Credit Canada, those relationships started off not on a lending foot. It was on a counseling foot, and the lending piece came much later. So, having that as the primary basis for the relationship does change the trust factor. and I think it's what financial institutions struggle with, generally speaking, when having to service traditionally underbanked demographics. Is not really what, especially on the retail side, what our staff are trained to do. It's not what is emphasized, from a management and leadership perspective at financial institutions. And the set of advice that you would give to, someone that would be classified as underbanked is generally a bit different. So what we see is like a willingness to help, but the knowledge of that specific advisory playbook is a bit underdeveloped at financial institutions. So it's an area for development. I think there's a lot of complexity there, and it's something we're really just at the beginning stages of flushing out with our work at the Impact Lab.
Great. And I do see, so I know we're at 6:30, we're past 6:30. I do see all these questions in the chat that I'm getting, but maybe I'll end with one last question just from Adam in the chat, which was, and I'll ask this to Ruth first, and then Alex, Keith, feel free to jump in. But is there anything that other jurisdictions that you've looked at that are doing to create inclusive financial services to help their citizens that you would like to see in Canada? So how do any other countries or other technologies or financial institutions, what's inspiring you on your side? So maybe I'll go with Ruth first with that question.
Sure. There's a lot of great initiatives that are being undertaken by other jurisdictions. Most recently, one of our international partners explained to us how they're partnering with financial institutions to roll out behavioral pilots to customers to help them save and build their savings. So these types of non-standard partnerships that can really, bring the ecosystem together and start collaborating on joint, joint common goals is really important. And I think that's also one of the keys to building trust with a lot of the underserved communities is, collaborating, having these new collaborations with organizations that are already working with the communities, already in that space, and understand the communities, understand their needs. So that's one thing that really stood out from recent conversations we've had with our international partners.
Great, thank you, Ruth. Alex, Keith, was there any other exciting things that you just want to bring up in our last minute here?
I mean, I'll go back to this point about automatic enrollment. So probably the most successful application of behavioral finance ever has been automatically getting more people enrolled in retirement plans. So if you live in the UK, if you live in California, if you live in Illinois, if you live in Oregon, if you work for an employer, you're going to be automatically enrolled in a retirement savings plan. You'll have the option to opt out, and that's provided for by law. That's helped over 10 million people in the UK who weren't saving before start saving for retirement. Incredibly successful, and we'd love to see more of that type of application done in Canada. Canada is behind some other peer jurisdictions in that area.
Great. Keith, any last thoughts?
I think there's I agree with those opportunities, and I think I would take an example, maybe not necessarily from financial services or fintech, but there's an opportunity for the right type of financial institution to look at evaluating their activities with a social value lens, as opposed to just a financial one, just a financial and risk lens. So looking at the economic value or social value being created by I use the changes in the escalator loan deck as stable housing, access to food. All those have a significant social value. And for financial institutions, there's a great opportunity if they're doing the right type of lending to look at their lending portfolios and the social value that they create.
Perfect. Well, we are over time by 5 minutes, so I just want to thank you to the three speakers again, Alex, Ruth, and Keith, for sharing all of their insights this evening with us. For me, I'm super excited. I think what we've realized, right, is that there's a very big problem to solve here in Canada, and it's a real problem. But what's exciting me is that over the past couple of years, we're seeing some of these initiatives from the government, from financial institutions, from fintechs that are really trying to tackle financial health and inclusive financial services from a lens which is really centered on the individual and their personal experiences. So really exciting to hear about some of the things that we talked about today. One quick note, so we're at 6:35, so thank you to the speakers. Now our next FinTech Drinks is going to happen in September. So I just want everyone to know that the 4th edition will be in September, and we'll be announcing the topics shortly. And then finally, we're going to be moving on to the Hopin platform to do some 3-minute networking. So if you want to see who else was here today at the event, if you want to chat with some of the speakers, or if you want to meet with some of the startups that we featured in our IFH Lab program, please head on to the networking now, and thank you for your time today.